Welcome back to the 90s podcast hosted by yours truly, Kevin Thompson, founder and CEO of 98 Capital Group. Thank you guys for joining. As I always say, subscribe to the channel. As I always say, go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@98capitalgroup.com. To your questions, go to the website at www.98capitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, and also entertain. Follow us on all social media channels at 98 Cap or at MLB to CFP. And subscribe to our Substack. Now what? It's tax season, and I want to get into the nitty gritty. Is the OBBBA actually saving you money? Well, let's dig into this because there's a lot of misinformation out there, as always, and I want to make sure that you understand what the difference between a tax cut and a refund actually is. So today, let's get it. So welcome back. So again, I'm Kevin Thompson, founder and CEO of 98 Capital Group. And today, are these tax cuts actually saving me money? Because if you listen to the messaging, you think Americans are about to get a massive tax relief. They're about to get these massive tax cuts. But after reviewing multiple 1040s, dozens, and tax returns, I'm going to tell you something that may surprise you. For most Americans, the savings are real, but they're not necessarily material as people would think. So today, let's break down these four things. What the bill actually did, why many Americans won't feel much different, why tax refunds may look bigger this year, where the real tax benefits actually are. So let's break down what the OBB, no, I'm going to call it what it is, the O3B actually did. First, let's get something straight. Despite what many headlines say, the O3B did not create a massive new wave of tax cuts. What it mainly did was extend 2017 tax cuts that were set to expire. Let's make sure we get that straight. Without this bill, many tax provisions would have sunset in 2026, meaning higher tax brackets, a smaller standard deduction, a lower child tax credit, the loss of the past due deductions for businesses. So in reality, the bill didn't necessarily lower your taxes further. It just prevented them from going up. That's an important distinction because avoiding a tax increase feels very different than receiving a new tax cut. So that's part one. Part two, I want to get into the granular details of why many Americans won't feel this current tax cut. I just kind of explained it to you because, again, we're doing these things. There's no additional tax cuts. So what are we talking about, right? This is where perspective matters. This is where perspective comes from. As a financial advisor, as someone who reviews a lot of tax returns, I can tell you what I'm actually seeing. Many people were expecting thousands of dollars in savings, and yes, money has come to them in the form of refunds. But when you look and run the numbers on real returns, the difference is much smaller than you think. I'm seeing $300 here, $400 here, $700 there, maybe even $1,000 in some cases. And there are a few reasons for that. First, most Americans already take the standard deduction, which limits how much additional tax benefit you can receive. Secondly, a lot of the deductions people hear about come with income phase-outs, meaning higher income households are not qualifying for such things. And thirdly, many of these provisions are temporary, which means they are set to expire and again in a few years. So we have to be cognizant of that. Now, part three. The 3,700, I think it says 3,700 or 3,200 refund narrative. I want to set this straight. There's this piece of the conversation that I think people need to understand. You're probably hearing numbers floated around. Oh, there's 3,200 average tax return, the 3,700 average tax return. People are getting these massive tax refunds. Something like an average tax refund being around $3,700, and some people are attributing that to the new tax law. But in many cases, that larger refund has very little to do with tax cuts themselves. Remember, nothing really changed. There were some credits and things that slightly moved forward, but nothing really changed except some simple things that happened in the middle of the year. Withholding tables were not fully updated in 2025. So in July of 2025, the tax bill gets released. The president signs it, and now you have to backdate all these different things. These old tables and the IRS tables weren't updated. Therefore, withholdings had already come out of your check. Yet, over withholding, larger refunds. Over withholding in the beginning of the year, larger refunds once you file your taxes. They're not going to give you that money back. It's already at the Treasury. So many employers and or employees continue withholding taxes from their paycheck based on older assumptions about the liability. What this means is people over withheld throughout the year. So when you're filing your return, they receive larger refunds, but a larger refund doesn't necessarily mean you paid less tax. It means you just gave the government an interest-free loan during the year and got it back later. And I'm seeing that on quite a few returns. So while the administration may point out to larger refunds as evidence of tax relief, a big portion of that number is really just over withholding mechanics. Now I'm hearing the people in the background, Kevin, you're a hater. You have a biased opinion. You don't necessarily believe in the OBBA and what it actually... No, that's not what I'm saying. Absolutely not the case. I am trying to become from an apolitical standpoint. And when I'm coming from this apolitical standpoint, I'm letting you know that nothing necessarily changed outside of some updated IRS tables. Some credits went up. Some standard deductions may have went up. But the tables were not updated with the IRS, which calls for higher withholdings, which basically means you're getting more of your money back that's being withheld. So, Kevin, where do some of the tax savings exist? Thank you for asking. There are real tax benefits in this bill. They're just not targeted to most people. For example, additional deductions for senior citizens, people 65 and older. I've seen that have a impact, not necessarily a large impact, an average savings on some of the tax returns about $700 to maybe $1,000, or upwards of $2,100, depending on where they fall on the income scale. Changes to the SALT cap deduction, powerful, especially on the coast. Up to $40,000. That's going to be huge because a lot of people were phased out, or not phased out, but when they or couldn't get it because it was $10,000 years back, and we know why. But it was put in a place where now people can take that and get a larger deduction over the standard deduction if they itemize. Again, deductions tie up to tips and overtime income. That beautiful. Now let's be clear. It's not tax-free. It may have been portrayed as something that's a tax-free income, but it's still subject to payroll taxes. And finally, increase in the child-related credits. That's powerful. Credits are by far the most powerful thing on your tax return. Always understand that. But again, these apply to specific taxpayers in specific situations. They don't apply evenly across the population. So where is the real money, Kevin? This is the God honest truth. And I'm gonna just give it to you because you know we're real here on this show. There's something that doesn't get talked about enough. The biggest financial advantages in this legislation often go to small business owners, pass-through entities, real estate investors, higher income households with complex tax situations. Yes, I said it. One of the most significant pieces of this bill was making the pass-through deduction permanent. This deduction allows some business owners to deduct up to 20% of qualified income, the QBI. For the right taxpayer, that could be meaningful, but again, that's not your average W-2 employee. The deductions that some of the businesses are getting right now, 100% bonus depreciation. Again, we mentioned through pass-through entities. There's so many things that are being offered to business owners right now that I believe that it pays to be a business owner. Of course, I'm a business owner. I own an RIA here in Fort Worth, Texas. And it's very profitable to be a business owner in regards to what you have access to. Knowing the tax code, being able to use the tax code in your interest for your business perspective, and being able to write down income. It's just, you're seeing a lot of people starting to move out of that W-2 world where you're handcuffed on what you can possibly do to the 1099 world where you have a wide swath of things that are open to you. It's powerful. So finally, what actually matters for tax planning? Here's the real takeaway. The OBBA, the O3B, is less about automatic savings and more about planning opportunities, because the tax code now creates windows where advisors can do things like Roth conversions at lower rates, strategic capital gain harvesting, income timing for retirees, optimizing deductions for business owners. In other words, the law itself doesn't magically save you money. Good planning does. So in closing, if you're asking the question, is the OBBA really saving Americans money? The honest answer is sometimes. But often not as much as the headline suggests. For many households, this law simply kept taxes from going up rather than dramatically lowering them. And some of the larger refunds people are seeing may simply be a result of over-withholding, not a dramatic tax cut. And that's why working with someone who actually understands the tax code and who looks at the 1040s every single year matters more than ever. Because the real advantage in the tax code isn't the law itself, it's how to navigate it. Thank you guys for listening to the 9 a.m. podcast. Subscribe to the channel. Go and get my book, MLB to CFP, live on Apple and Amazon. You have any questions, comments, or concerns, you can email us at info@99capitalgroup.com. Send us your questions. Go to the website at www.99capitalgroup.com. Schedule an appointment. As you know, we're here to do what? Educate, empower, engage, also entertain. Follow us on all social media channels at 99cap or at MLB to CFP. And subscribe to our Substack. Now what? Thank you guys for listening. I hope this has been a valuable use of your time. I hope I'm educating you to the point where you're looking through the headlines and at what really is going on. Because if you think about it, hey, it's just an extension of the tax code. It's just an extension of the current taxes that we had in 2017 with some slight bumps in certain areas. Then how is everybody getting larger refunds? Well, withholdings, my friend. Withholdings, Dr. Watson. Withholdings, Dr. Watson. Thank you guys for listening. Stay home and stay safe, my friends. I'll see you again soon.